Let's start, my dears, maybe with the short-term hodler SOPR indicator. This indicator briefly surpassed the level of 1. As you can see here, this means that the short-term hodlers who recently bought Bitcoin have been tested. So their positions were at 0 or in the negative. This is also a sufficient level of correction. We can notice that the last time the SOPR surpassed the line of 1, the chart was immediately pulled up. And we reached the level, of course, of $109,000. At the same time, sending the value of the indicator to 0.6. My dear ones, so here we are. A minimal shakeout in the market. After breaking the new ATH, it has been fulfilled. Examining SOPR and short-term hodlers, the correction seems accounted for, suggesting a rise, but it might still drop to test this area. The correction has been accounted for and we could continue to rise. This indicator might test the area around $90,000. However, it's not yet said that this indicator won't want to drop a little lower and test the area here. $90,000, specifically with the short-term holder realized price. Listen, on the other hand, we have the Bitcoin Coinbase Premium Index. We still have red bars on it, which doesn't look too good on this indicator. This means, listen, that for institutional investors in the US trading on Coinbase, Bitcoin is still not an attractive asset. For purchases, the potential demand from investors across the ocean might just be low. Americans might be waiting for Bitcoin prices to drop. Monitoring Coinbase is crucial as it's the main US crypto exchange. At least down to 90,000, maybe something below 90,000. It's very important for us to keep an eye on this index because in the US, Coinbase is the main exchange where Americans trade their cryptocurrencies. So it will be important here how and when the green bars will appear for us, which will indicate that Americans are entering the market and could significantly pump the price of Bitcoin. My dear Bitcoin retail investor, volume from $0 to $10,000. We have quite an interesting situation on the indicator showing demand from retail investors. Despite this, listen, Trump is now officially the president of the United States. Bitcoin is holding above $100,000. So their presence in the market is roughly at the same level as when we had 65,000. So there is currently a certain dependency in the market. I think this is known to us conscious investors because the average person really doesn't understand what's going on with these charts and doesn't take them into account, even though they are important. Specifically, when it goes up, everyone says, to the moon, and Bitcoin has no limits. But when it really comes down to it, we are stopping at a certain level for a longer time. This interest in Bitcoin is instantly dropping because, after all, it's not going to the moon, there aren't constant impulses, and unfortunately, very few people on the street realize that the market moves in waves. When we have an impulse, a correction must follow. It doesn't matter whether we have bullish or bearish news. If there's no train to hop on, retail says adios, and it disappears from the internet. And then, when Bitcoin is back on top, retail investors buy again at the peaks. You can often see this in the comments. It's a very good gauge of sentiment when Bitcoin is going up. And everyone in the comments is saying, what the hell are you talking about with the correction? This means, my dear friends, that a correction is near. And here, Bitcoin, estimated leverage ratio. And here is something very interesting because I found this chart, ONCHAIN, showing the average leverage on exchanges and the reaction of the chart when this average leverage simply becomes too big. According to him, the current leverage at this moment is, my dear friends, around. In the current consolidation, the leverage was only at higher values twice and made a correction from those levels. It's a pretty straightforward dependency because the higher the leverage we have, unfortunately, a small number of traders in the futures market can manage their money well. And above all, they know what position sizing is about, so those who are on high leverage don't have their positions well secured and properly sized. Moon management. They're just getting wiped out by squeezes, so the higher the leverage, the more we can actually have a stronger, more impulsive movement. And those were, my friends, the levels of 27 and 28. This means that we could get another push on Bitcoin before we possibly head back to around 90,000 after grabbing that big one, the nut, from January 13th. So, my dears, before these further possible declines, we will actually break through $110,000, maybe even $116,000. Is of course very much possible. However, for me at the moment, it is trading Bitcoin. Jumping in at the top thinking it might still go up is just a shot in the foot. If someone wants to catch long positions or buy Bitcoin, it's better to stand aside from the market. At low prices, it won't be a good pain in my opinion. Better to stand by the market, observe, or possibly short if you have any kind of strategy and think the market will go down. Alternatively, after some reasonable corrections, like the recent ones, just load up on long positions, just like it was played out on Discord during the live session regarding Bitcoin. According to the liquidity map, for the first time in a long while, we saw money at the level of $90,000 and $95,000. According to the liquidity map, for the first time in a long while, we saw money at the level of $95,000. Of course, these are some funny values. Looking at what we had earlier, because earlier we had below 90 and above 110,000. Recently, however, we managed to just tap $110,000. So, take that liquidity from the liquid map. Not on ByBit because we were a few dollars short there, but on Binance we already hit that 110,000. And as we can see down below, we're slowly making some money. So here around 90.95, something is starting to show up. However, for now, this is minimal liquidity. Of course, as I said, there isn't much of it here. There is much more at higher levels. But as you can see below, on the other hand, down here below $90,000, there's really a lot of this money already. So, sooner or later, it would be good, and it should be done this way, that this money will be taken. I'm not saying that right now we'll soon see a correction to 75, but we can't ignore how large the amount of money is. Here it lies even when looking compared to 110, thousands up. My dear friends, at this moment, capital rotation net position change. What about that? What's next with the alt saison? You know my opinion well, and I've shared my thoughts with you. As for the possibility of whether alt saison will even happen in a few episodes, of course, I'm not against it because just like you, I want this alt saison to happen, for this alt saison to happen, for this alt saison to happen. I have a few altcoins bought besides Bitcoin, of course. However, the situation just doesn't look bright. It's black and white, so I'm not getting excited. God knows how, that we will see amazing increases in the alts. Of course, I would like that, but it just doesn't all look very, very good. Just like in the previous bull markets. And here is the typical alt season indicator. At this moment, for now, it doesn't tell us much. Capital keeps flowing out of Ethereum. More and more than last time. And even though Bitcoin is doing really well, because let's not hide it anymore, the 100,000 on Bitcoin is being maintained with a remarkable result to Ethereum. Both on this indicator and on the chart, it shows us that things are at least bad with it. However, it's also worth noting that the capital rotating into Bitcoin, which is the orange chart, is also starting to decrease, which is quite concerning. Because the capital flowing into stables is also, my friends, decreasing. So we have a decrease in the inflow of capital into Bitcoin stables, and the outflow from Ethereum, i.e. Casa, is slowly starting to disappear from the market, which may signal that we may potentially be approaching the end. Bull market. Of course, this is not an indicator. That tells us 100% what will happen, but it is black and white. The interpretation of this really is simple. If money is flowing out from everywhere, then where are we supposed to get a bull market? Since there simply isn't enough money to build a bull run. Miner. Net position change. Interestingly, miners have decided to wake up for the first time in 2 months and buy some bitcoins. As you can see here on this small piece, some funny purchases have appeared. Overall, looking at their behavior, it's hard to understand their way of thinking when it comes to making moves in their wallets, especially buying very frequently at the peaks and selling at the lows. They really like to do that very often. They were selling heavily when Bitcoin was below $100,000. Listen, now that we are above 100,000, they decide to make some purchases. I know that they probably won't make a big difference, but these are still movements. At least it's idiotic. Bitcoin cycle extreme oscillator. We've run out of signals like SOPR and MVRV. Yellow and green. The black line, however, the condition is nearing zero. Here, meaning the point needed post-March for market strength to increase. The black line, listen, however, the condition is slowly starting to approach the 0 point. Here, meaning the place that was needed to be reached after the events in March for the market to have the strength again for such big increases. At that time, we were also overextended on SOPR and MVRV, and we needed to ease their values to start another increase. So, do we really have a continuation of the increases here, or could some actual correction show up? We need to watch how it will react. The chart strictly for Bitcoin is just for this Bitcoin cycle extreme chart, the oscillator approaching zero. At this moment, my friends, the air-hold ratio, or actually the air-hold momentum, it clearly tells us that we are in a bull market and for now we're not going anywhere from it. No, we're choosing here as well. In fact, these statements on the on-chain data are quite divided, but I'll give you my own comment at the end. We are currently at a level of 1.21, my friends, and we can calmly go up to a level of 2.5. We can push before we enter the overheated zone, that red zone you see here. So, no changes. Then you'll break around $110,000, $120,000. It's real. The question is whether right now, or if we decide to cool this indicator down a bit more because it's not set in stone, that we, while still being in this orange zone, need to push up to the red zone, because we might even drop a little lower. However, for now, it actually looks like on this indicator that we've, let's say, shaped this correction, or rather, this current local bottom. At this moment, Bitcoin price performance versus Bitcoin. My friends, it's clearly outlined. However, let me explain what this is all about. The indicator showing the performance of altcoins Compared to Bitcoin, it clearly indicates that a bigger move is coming in one direction or another. And we're not talking about just some ordinary move, by 2,000 to 3,000, but with a strong, impulsive move. Bitcoin's dominance remains high and is continuously increasing. Total 3, which is the market capitalization of altcoins, doesn't have the strength to break the ATH from the previous cycle. As for that, the number of altcoins is constantly increasing, which means it's starting to get crowded. Simply put, on these lines that you see here, at the moment when we have a strong compression of asset values and the range in which we are moving keeps getting smaller. And this, listen, signals that a breakout is approaching. No one has a glass ball, doesn't know if it's a breakout, bottom, or top. However, you can expect impulsive moves in the cryptocurrency markets, especially with Bitcoin. Overall, my dear friends, this is actually the first time since I started recording on-chain episodes that I can say they are super bland. Not much has really changed in the market since the last episode. Aside from this local correction after the release of DeepSeek, which was quite interesting because of the short position. Fortunately, I had it secured and I mentioned this in the episodes before the drop in the Bitcoin market. However, the indicators are starting to go a bit crazy. And at such a moment, my dear friends, I'll be honest with you, it's better to seek help. One could say strictly on the chart, and above all on the chart that will show us liquidity. Because I think with all the moves at Forex Factory, or actually what's going on around Trump and around cryptocurrencies, actually Trump and cryptocurrencies, what they're doing in the market is pretty weird. Maybe the indicators are going crazy because of that too, so I wouldn't want you to. Now they relied on them 100% because they partly show increases and partly show decreases. I personally have a bit of a no-trade zone. Of course, I try to trade locally, but in my opinion, as for the indicators, I can say that I agree with them, and what they indicate is that a really strong impulsive move is getting ready, which will show us the direction. I believe that if we get a breakout to the upside of the all-time high, it will be the last spike up, after which we'll get a legitimate correction. I hope we can at least reach those $73,000. However, if we start breaking down, it will turn out that the peak I showed in the last episodes is actually similar to the peak from the first part of the last bull market. And then we could actually drop down to those $71,000 to $73,000 on Bitcoin. And my dear friends, that's all for today. I hope you enjoyed the episode. If so, let me know in the comments what you think about the current market. Do you think we will get an upward impulse down, or will we simply have a temporary crypto winter? And to the haters, thank you for the comments because it makes it easier for me to gauge the market sentiment. Take care. See you next time. Take care and see you next time. Take care.